Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong level of monthly historical support and demand. In fact, from here, multiple rejections to the upside were created every single time that the market tested this area. And what we can see is that at the moment, the market is testing once again the exact same zone, rejecting it to the upside. And from here, we could expect more potential bullish continuation. So from a monthly standpoint, everything looks extremely bullish. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can notice how we just had a break of structure. In fact, the market just shifted from a bearish market, which we can easily notice by looking here at how the market was creating lower lows and lower highs. We then had a triple bottom at this area, and the market shifted to creating higher highs and higher lows. Now, the creation of higher highs and higher lows, or lower lows and lower highs, is by definition what an uptrend is and what a downtrend is, because when you have a downtrend, you have the creation of lower lows and lower highs. When you have an uptrend, you have the creation of higher highs and higher lows. So clearly, that is why I say here that we had a shift from a bearish market to a bullish market. Now, when the market here created this new higher high, that is when we had this shift. And after the creation of an impulse, you would expect, again, a correction and then the continuation higher for the creation, again, of a new higher low. So in this case, what we could expect is first a correction and then the continuation higher, essentially to create a new higher low, because we have the previous high here, the higher high here, the low here, and at that point we would have a higher low here, after which we could expect the continuation to the upside. And this would be rejecting the monthly support and demand that we have just identified from a monthly standpoint. Now, if we drop down on the daily time frame, what do we have? Well, from a daily standpoint, first of all, I did speak about GBPUSD a few days ago. When the market was around this area, I explained all the reasons for which we could expect this rejection to the upside, which in fact the market has just given us. And by the way, I will link in description this previous analysis so you can go and check it out for more free education. Now, in creating this move to the upside, the market is also currently breaking new structure. In fact, what we can see here is that at this level, we have previous daily resistance that is now turned support here. Now, we can also notice that from a pattern standpoint, we clearly have an impulse. Now, generally speaking, as I explained also previously, no market just follows through going straight up. Every market will create impulses and corrections, which is what creates higher highs and higher lows. So as the market just created this new impulse, what we could expect at this point is first a correction and then the continuation higher. Now, as we had the creation of this impulse, if we want to measure a potential correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.32 and 50% retracements currently lining up exactly in this area that I have just identified with this blue box, which, since it is also the previous resistance turn support, means that actually this is a confluence of support area, because we have the 0.32, 50% retracement, and also the previous resistance turn support, all lining up in the same area of price. Now, when you have a confluence of support area, that increases the probabilities that you will see institutional longing inside of this zone. Now, If we go and see what we have when it comes to the commitment of traders, so essentially what institutions are doing in the market, and we check the data precisely for the pound, we have to keep in mind that if we're checking data for the pound, we're actually already checking GBP USD. So what institutions are doing on GBP USD, and what we can see here is that with the last reports, actually net positions have been decreased. We still don't see strong institutional longing. We can see how we now reached minus 27k net positions. Now, being this one of the lowest levels that we had so far, essentially this means that from here there is a possibility to start to see net positions getting increased. We can see here, for example, when we reach the opposite thing, so the peak in the high number of net positions, after that net positions started getting decreased. The same exact thing has a high probability of happening in a situation like this, where now we reach the peak to the negative side for GBP USD, and now institutions will start to long GBP USD, since, as we have identified at the beginning of the video, we are currently rejecting a strong historical monthly support and demand area. Now, considering the fact that we could see at any moment now institutions starting to enter longs again for GBP USD, a confluence of support area is definitely an area inside of which we would have good probabilities of seeing that institutional longing. So if the market will go and retrace to this area and we start to see net positions getting increased, that is definitely a good thing. And how I would be potentially looking for this potential move to the upside away from this area. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and the daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what I could be doing potentially is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to us one of my valid entries at that point, I could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns and the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that you have the possibility to join in order to gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.